The banking sector is the backbone of any economy. It provides a safe place for people to store their money, and banks lend that money out to individuals and businesses to fuel economic growth. However, in 2023, the American banking sector experienced a massive collapse that shook the economy to its core. Let's take a closer look at the 15 reasons behind this collapse. 1. Excessive risk-taking. Banks began to take on excessive risks, such as making loans to individuals who were unlikely to repay them. 1. This led to an increase in defaults, which in turn caused banks to suffer losses. 2. Over-reliance on short-term funding. Banks became over-reliant on short-term funding, such as overnight loans, which made them vulnerable to sudden changes in the market. 3. Mismanagement. Many banks were poorly managed, with executives making decisions that were not in the best interests of the bank or its customers. 4. Lack of transparency. Some banks were not transparent about their financial practices, making it difficult for regulators and investors to understand the risks they were taking. 5. Regulatory failures. Regulators failed to adequately monitor and regulate the banking sector, allowing banks to engage in risky practices. 6. Shadow banking. Shadow banks, such as hedge funds and private equity firms, began to take on many of the same risks as traditional banks, but without the same level of regulation. 7. Too big to fail. Some banks became so large that they were considered too big to fail, meaning that their collapse could have devastating consequences for the economy. 8. Cybersecurity threats. Banks became increasingly vulnerable to cybersecurity threats, which could lead to the loss of customer data and funds. 9. Lack of diversity. The banking sector lacked diversity, with many executives and employees coming from similar backgrounds and having similar perspectives. 10. Income inequality. The growing income inequality in the United States meant that many people were unable to access basic financial services, such as banking and loans. 11. Lack of financial education. Many Americans lacked basic financial education, making them vulnerable to predatory lending practices and other financial scams. 12. Political instability. Political instability in the United States, including partisan gridlock and government shutdowns, made it difficult for banks to plan for the future. 13. Economic downturn. The American economy experienced a downturn, with high levels of unemployment and slow economic growth, which made it difficult for many people to repay their loans. 14. Climate change. The impact of climate change, such as extreme weather events, made it more difficult for banks to assess risk and caused losses for some banks. 15. Pandemic. The COVID-19 pandemic had a major impact on the banking sector, with many people struggling to repay their loans and banks experiencing losses due to loan defaults. The collapse of the American banking sector in 2023 was the result of a combination of factors, including excessive risk-taking, over-reliance on short-term funding, mismanagement, lack of transparency, regulatory failures, shadow banking, and cybersecurity threats, among others. It is important for regulators, banks, and consumers to take steps to address these issues to prevent a similar crisis from happening in the future. By understanding the reasons behind the collapse, we can work towards creating a more stable and resilient banking sector that benefits everyone. Thank you for watching.